Hello, everybody. Welcome to our Facebook Live. If you're joining us, just let us know where you're joining us from. And if you have any questions, just type in the comment section. Then we'll address the questions at a later stage. Just invite somebody, take a friend. How money is used determines the effect we get from it. And no matter what your beliefs around money is, we live in a world that is driven by money. So we have to, it's important to develop a healthy relationship with it. Today, again, we have Themba. Themba is a chartered accountant with more than 24 years of experience in corporate financial management and risk management. He holds a master's in business administration and has been a consultant and trainer in risk management, asset and liability management, and investment management for several corporates in 13 African countries. Themba has done presentations on personal financial management over a period of 15 years to several white collar and blue collar audiences. For today's talk, Themba is speaking as an upcoming author of the book, Managing Your Personal Finances Like a Black Belt. Themba believes that if you have an income, anyone can be financially independent or retire in 5 years. And for one to achieve the personal financial skills like a black belt, one has to have hard financial skills, the right mindset, developed level of consciousness, and developed habits. So again, if you have any questions, you can just type in, then I will address the questions later. Take a friend, invite a friend. Over to you, Themba.
Thank you very much, Tafadzo, for that introduction. Welcome to everyone to another installment of Manage Your Personal Finances Like a Black Belt. As Tafadzo has indicated, I have written a book on this particular subject. What I share as content in these installments is essentially based on my personal experience. You've heard it being said that a wise man learns from their own mistake, but a genius learns from other people's mistakes. So what I really intend for us to do is to learn from my mistakes so that you don't repeat them. But also the content is based on my experience as a banker. As a banker, I've observed how people manage their finances. I have observed how banks manage their own finances. And these are some of the experiences that I would want to share with everyone in this particular installment of Manage Your Personal Finances Like a Black Belt. Before I go into the content of today, I just want to emphasize 3 important points that we discussed in the previous installment. The first point that I would want to emphasize is that I actually prefer that people manage their personal finances in a very conservative manner. So we must take a conservative approach in the management of finances. I've seen people who are very highly optimistic about their state of affairs go into financial problems, essentially because of their overstated optimism. So here is my advice for all of us, particularly when you are in the yellow belt, orange belt levels. You might find yourself under a lot of financial pressure. The budget does not balance. And sometimes you may have a misplaced optimism about the future and how things will eventually pan out. My advice is that downgrade before it's too late. I have seen people who have waited until it's too late and they have gone into financial ruin. If all indications are that you are in some kind of financial stress, it's actually time for you to downgrade before even the lawyers come knocking on your door. And many people, for one reason or another, have got this resistance, they have got this reluctance to do it because they always hope that things will work out for the better. In most cases, it doesn't. So if you're experiencing some kind of financial stress, downgrade before it's too late. What we are aiming to do as we increase our level of proficiency is to be able to see events 6 months from now. We want to put a budgeting framework which will alert us to possibilities before they even materialize. So today we'll be talking about risk management. And one of the things that you will hear me say time and time over again is that risk management is a forward-looking discipline. So in your forward-looking approach, if you see that you are in financial stress, the time to take corrective action and preemptive action is actually now. Don't wait until it's too late. Take action today. The other thing that I would really want to emphasize, and I've heard people communicate with me about what I said last week, I essentially said you must maintain an emergency account equivalent to 3 months worth of your expenses. Some people prefer it to be their salaries. The background to that number is that sometimes it's possible for you to lose a job, and it will take, presumably if you are employable, 3 months before you get another job. So that is the basis of the 3 months reserve. But as you know, as you increase your level of proficiency, you might actually come up with a different number, which is reflective of your personal circumstances. Just as, sometimes when we were in grade 1 and the teacher would say 1 minus 2, the answer would be it can't. But as you go and learn maths more and more, you'll know that the answer is -1. It's not it can't. Same thing, at yellow belt level, we prefer that you keep 3 months. But as you adjust, as you increase your level of proficiency in financial management, you will come up with a number that is reflective of your personal circumstances. That number may be less than 3 months. It may be, more than 3 months. There are two particular things that I want to talk about these emergency reserves. Remember what we said, this emergency reserve is separate from your normal transactional account. You can't commingle these numbers. So it has to be separate. It has to be in a different account. The easiest way to determine this number, if you don't like the 3 months, is to think about the times in the past when you were really broke and you were looking for a loan. How much were you looking for at that point? What was the amount that would have taken you forward? That is the amount that you must keep in a reserve, so that if the same situation happens, you are going to self-fund yourself. The thing about borrowing money is that we want to create these facilities before we get into trouble. Managing personal finances effectively is all about seeing issues on the horizon before they become problems. And that is the skill that I would really want us to get as we go through this session. The other thing that I want to say about this reserve is that because of the high inflation that we are in at the moment, I actually prefer that this reserve is invested in instruments that would give us at least an after-tax in return which is above inflation. It shouldn't be kept in a bank account. Bank accounts do not return a return which is above inflation, right? Some people, as they develop their financial skills, they might want to keep these reserves in the form of facilities which are available for stress funding. If that is your approach, I'm happy with that as well. The other point that I would want to highlight before I go into the content of today is that I hope you are getting comfortable with budgeting skills. As we go into higher proficiency levels, I will mention that obviously we were talking about a 1-month budget in the previous installment, but as we develop, I might introduce you to a yearly budget. At the beginning of the year, it's advisable that you plan the whole year. And also at the green belt level, I will introduce you to a fine 5-year plan, right? But for now, a 1-month budget would actually do it. So those are the 3 things that I just wanted to highlight before we go into the content of today. What are we talking about today? Today, we really want to talk about what it takes to be an orange belt as far as personal financial management is concerned. And there are things that I would want to highlight there, which are very important. So if you will allow me, I am going to just project on the screen here my presentation, which I will essentially go through. And some people have asked for this presentation. I'll be prepared to give it to anybody, as long as you communicate with Tafadzwa, and she will be able to give it to you. So at orange belt level, the skill that I would really want to talk about relates to risk management. You may plan the best that you would want to plan, but things do happen. So one of the key messages that I would want to communicate today is that in our financial planning, we must be prepared for the eventuality of things going wrong. Haven't you heard of somebody who had the best plans in the world and then they were retrenched? Or they had the best plans in the world, but then there was a funeral in the home, or there was a life-changing event which totally upset their financial plans. That's what we are talking about here. We're talking about what are some of the risk management principles that we can put in place in our personal financial management journey, which will help us to manage our personal finances like a black belt. Haven't you also heard about people who at some point had lots of money, but they lost it all because of things that really happened? So let me give you a personal example of what I'm talking about. When I was growing up as a young man in Zimbabwe, I actually saw people who were wealthy. That was before hyperinflation. And then hyperinflation happened. These people had their wealth wiped out because of the hyperinflationary environment. Not because they had done anything wrong, but that the economy took a nosedive. So these are things that we'll be talking about. You know, when I look at those people today, they are nowhere near where they were a number of years, ago. And so in our financial management journey, we need to be prepared for all of these things that may happen so that we may guarantee our success. So what are some of the skills that we are talking about today at orange belt level? At orange belt level, in terms of the hard skills, there are 2 particular skills that I want to talk about. I want to talk about risk management skills, but I also want to talk about time management skills. Whenever I coach people about finances, especially young people, I make it a point to communicate to them that time is indeed money. Before I can tell them about money management, I would want to tell them about time management, because that's very important. So at the orange belt level, I'm going to introduce you to 4th generation time management skills, particularly those that are aligned with creating wealth. We're going to talk about the concept of multiplying time, because not only must we multiply time, we must also multiply money, but the 2 go hand in hand. So I'm not going to talk about those 2nd generation, 3rd generation ideas about time management, but these are 4th generation ideas about time. What do I mean when I talk about 4th generation ideas about time? Some of you might have heard this point about we are in the 4th industrial revolution. Some people have called it Industry 4.0. So when you are in that digital age, time has to be managed totally different. So those are the skills that we'll talk about. In terms of mindset, I want us to move from a victim mindset into what I call an achiever mentality. An achiever mentality is where you take personal responsibility over your finances. And then in terms of habit, I would want us to get into the habit of cultivating gratitude on a daily basis. So you have heard people talking about having a gratitude list. I think it really helps, for giving people, being authentic, having integrity, but also having tremendous amounts of faith. These are things that are not taught in a textbook. But I believe that as we increase our financial proficiency, it's also possible for us to have a measure of faith that will take us towards the journey of financial independence. In the next installment, we'll talk about the green belt skills, but not for today. So let's go a little bit deeper on the hard financial skills that we are talking about today. And two categories of skills: risk management skills and time management skills. At this level, as an orange belt, you need to understand your risk appetite. As individuals, we are wired differently. There are people who are wired to be risk takers. These are people who thrive on taking risks in their lives. Then there are people who are wired to be risk neutral. Other people are risk averse. They try to avoid risk. There is no one way of being wired. It's not as if the risk takers are better than the risk averse people. We are just different. You just have to know how you are wired, because how you are wired will then inform your financial management strategy. So you need to understand your risk appetite. And this is how it works. If you've got a very low tolerance of risk, it means that you're going to put a number of risk controls, and possibly you will keep less reserves. Two things. If you are a risk taker, it means that you've got a higher tolerance of risk, but also it means that you need to keep a higher reserves, because high risk, high return, it means that anything can happen. And this is something that many people do not understand, that we are wired differently as far as risk is concerned. And how we are wired must also influence the amount of reserves that we ultimately keep. So even when you are a risk taker, I'm not talking about being careless as far as managing money is concerned. I'm just talking about having a higher tolerance of risk. All right. So you then need to align your reserves. When I talk about reserves, I'm talking about the money that you keep outside of the normal balance on your bank account. This is the cushion that will protect you when you go into financial problems. The other thing that I want to talk about is understanding the concept of extreme risk management. In risk management, there is a concept called extreme risks. Extreme risk management refers to the management of those risks that have got a low probability of occurring, but if they were to occur, they would have a high impact in our life. So an extreme risk might be you losing a job. It might be you dying. That's an extreme risk. So in our management of finances, we need to protect ourselves, mitigate those extreme risks. How are they mitigated? Through insurance, through what we would call contingency planning. So you need to plan for all of these things, for the possibility of these things happening. We also need to apply what we call emerging risk analysis. Remember the example that I gave you of the country of Zimbabwe going to a hyperinflation, and as a result, having savings wiped out. Some people were clever. I'm not going to mention their names. They saw this risk happening, and they were able to position themselves. So emerging risk analysis is about scanning the environment right? Because some people bury their heads in sand. Even in South Africa, as stable as the economy might be, if you are to manage money and to protect the wealth that you are creating, you have to look at what is happening in the external environment which may affect my wealth and begin to prepare yourselves for all of those things, because it's very, very important. If I find time today, I may be able to explain to you some of the things that I see on the horizon. So people who are very passionate about financial independence, these are people who read newspapers, listen to financial news, and try to make sense of what the world might be in the future, right? Very, very important. For example, there is no question in my mind that we have entered a period of high inflation. So in the UK, they are complaining about high inflation. In America, high inflation, although it's beginning to taper off, but we've entered a period of high inflation and a period of volatility and uncertainty. And we then need to position ourselves appropriately. Then we need to use insurance effectively. Some of the insurance products that I will talk about today are very expensive. And one of the mistakes that people do is sometimes to accumulate more insurance than they need. And then when they experience financial problems, they default on their premiums, then the insurance contracts are canceled. That doesn't serve our purposes and what we are trying to do today. So as far as insurance is concerned, make sure that you are insured for the significant risks that you are exposed to. Normally, this would be death and funeral policies, and even your car, right? Car insurance, and operating with a medical aid, because if you fall sick, you need to be relying on medical aid. So we need to use insurance effectively. As we talk about financial management, I want us to get into this area where we are not buying insurance because an insurance salesperson has convinced us that this is a good product. I want us to get into a space where you know the amount of cover that you need. You are able to articulate that need to insurance people so that they get you the right product. And you're not somebody who is buying things left, right, and center, but everything aligns with your financial plan. Time management. Most of what I will say on time management is coming from a book written by a guy called Rory Vaden. I like Rory. He's a very young man. He wrote a book, Procrastinate on Purpose, 5 Permissions to Multiply Your Money. Essentially, for some of you who have studied this second generation and third generation ways of time management, which were promulgated by people like Steve Covey, he used to draw 4 quadrants. On the one line, he had urgent things. On the other line, he had important things. So you had to prioritize your tasks based on which category they fell. What Rory does is to add a third line so that we create sort of a 3-dimensional figure. And that third line is significance. So what he's basically saying is that success and greatness is not related to the volume of tasks that you complete, but the significance of them. So it's not about focusing on the important things which are urgent. It's asking yourself, is it significant? Is it aligned to my purpose and to the goals that I want to achieve? Many people are in this rat race of completing the tasks on their to-do list. And as a result, they fail to complete those tasks. What Rory is saying is that don't worry about a to-do list. A to-do list does not work. Worry about, did I do today 2-3 things that are significant, which will take me to where I would want to go? In this case, financial independence, right? He also says that you multiply time by giving yourself the emotional permission to spend time on things today that will give you more time tomorrow. What is he talking about? He is basically saying because we want to retire in 5 years' time, we must work today so that we create time tomorrow, right? Have you ever met people who've got so much money, but they also don't have time? When you get to black belt level, you will have money and you will have time to enjoy the money that you have made because you have learned how to multiply, time. And the other thing that Rory says, which is very important, and I found this fascinating, is then he said, because you have heard the advice that say you must be balanced. Rory says balance is a horrible metaphor for time management. Great results are not achieved through balance. They are achieved through short seasons of imbalance. Think of how Bill Gates created Microsoft. At one point, he had to spend time working on the project, not being balanced, right? Because he had to make it work. And that's essentially what he is talking about. You'll actually see that some of Rory's ideas go against the grain of what you have heard about time management. But I think they are very, very, very useful in my point of view. He's got what he calls a focus funnel, right? Which is what I have presented there. And on top of that focus funnel, you've got all the tasks that you need to do. Then he says, based on a priority list, eliminate. In other words, there are things that you must learn to say no to, right? Let me give you an example. Because I'm very passionate about making money and retiring, I'm very capable of mowing the lawn at home. But sometimes when my wife asks me to mow the lawn and mow the grass, I have to say no. It's a task that I could do, but I eliminate it because it's got no significance and purpose. There is somebody out there whose purpose it is to mow the lawn and who wants to make money mowing the lawn. So what I would then do is that I eliminate that task and I would source it to somebody else so that I can focus on the things that will take me to where I would want to go. I cannot tell you how many people I have spoken to who have said, Temba, this year I will write a book because I believe that it's my purpose to write a book and to leave a legacy. But then they are so busy doing everything, they never multiply their time to focus. And what Rory is saying is that if it is something that is of significance, you need to eliminate it. After eliminating certain tasks, you remain with other tasks. Then you think about, can I automate it? Can I use technology to make these things, being delivered very fast? So that, because we are living in the world of automation. Automating things could be, instead of driving to the grocery shop, you then just order online, leveraging on technology, or pre-ordering your groceries, using technology to the best advantage. Because I cannot teach you about being wealth unless I have taught you how to manage time. Because we live in a time where we can be easily distracted. I cannot tell you how many people have said, Temba, this is the year, this is my year where I will do great things as far as progress in finances is concerned. But then they are busy doing this, busy doing that, and they do not have a methodology of managing their time, right? Automating. By the way, one of the things that you must eliminate is watching TV. You'll be so surprised. Some of the states that we have from America is that people spend 8 hours watching TV. You'd rather be the person on TV rather than the person spending time watching TV, because we need to create time. So that's one of the tasks that you need to eliminate right then so that you can focus. And then he basically also talks about delegate to somebody. Then when you remain with those tasks, you then decide to concentrate on them. Now, you do it now. Or you procrastinate on purpose, in which case it comes back to the focus funnel. I hope you get my point here. My point is really that, look, time is money. And I want you to be able to manage your time. I always ask this question to people. Do you think that billionaires actually take time to watch soapies on television. No, they don't. They spend their time in a quality manner. And there is a difference between how a poor person spends their time and how somebody who has made financial progress spends their time. And so this is fourth generation ways of managing our time. All right. In terms of the of mastery in mindset, at Orange Belt level, I want us to get into the habit of reading personal development books. So now, one book that I would advise that everyone reads, because it's a best-selling book of all time, Think and Grow Rich by Napoleon Hill. I don't allow my students in this personal financial management journey not to read that book, because it's a very, very important book. The Richest Man in Babylon, right? Those are books that you need to read as you develop yourself. In terms of mindset, my mentor taught me one thing at this stage. He says, Temba, you need to give up GOOP. That was his acronym. Then I said to him, what is GOOP? He says GOOP is the good opinion of other people. At Orange Belt level, don't worry about the person next door. Don't worry about the Johns, because sometimes people make financial decisions because of the good opinion of other people. We are slaves of the expectations that other people have for us. And so at this level, in terms of mindset, I want you to give up GOOP. Don't care about what other people will think of you as you embark on this journey. You need to worry about your financial progress and where you are headed to, because GOOP will keep you in a state of mediocrity, right? In terms of habits, I've already spoken about the habits. You need to cultivate gratitude. You need to be forgiving. Forgive yourself. You've made mistakes, then you need to forgive yourself for the mistakes that you have made. I introduced a budget last week, and I introduced a way of budgeting. I introduced you to a monthly budget. As we go to Greenbelt level, we're going to learn more budgeting skills and how to budget. But this is the budget that I introduced you to. I want us to focus on the safety needs, medical aid, insurance, because those are the risk management expenses that I would want to talk about today. So remember what I said. Things can go wrong in this financial management journey. And as you take responsibility over your personal finances, you mustn't blame inflation and the government and blame circumstances, because at Orange Belt level, you take personal responsibility over your life. There are people that I have met who say, Temba, if it had not been for COVID, I would have been a billionaire, but COVID wiped me out. COVID was an extreme risk, we all agree, but I can even show you people who made billions during COVID. And they made billions because they are well positioned, for it. So remember what I said at Yellow Belt level, no excuses. I don't want any excuses that you may give me where you say, if it had not been for the economy, if it had not been for COVID, if it had not been for this and that. Have you ever met somebody who, when you start talking to them, they open their briefcase of excuses to explain why they are where they are? They will have excuses such as, Temba, me, I went to school with this president that you see. If it had not been for this, I would also be, as influential as this person is, because we were sitting together on one desk at school. And so they give you excuse after excuse about why they have not made the financial progress that they are supposed to have made, in life. That's what we want to talk about. How do you manage risk? The starting point of managing risk is understanding your risk appetite, understanding how God created you. By the way, understanding your risk appetite will become important as we go to increasing level of proficiency, because one day I will talk to you about investing. Investing is also a function of your appetite. There are certain investments that you would never do if you are risk averse. There are certain investments that risk takers would do. For example, I'm a risk taker. That's how God created me, to take risk. My wife tends to be a risk averse person, and that's fine. We were created differently. And we have to understand that that's what we want. So you need to understand, if you are, so my wife is that person who, because she's risk averse, she is so much into emergency account and creating an emergency account. I'm naturally the risk-taking person. But this is the thing that I want. There are 2 points that I want to highlight as far as budgeting is concerned. The first point that I want to highlight, have you ever met a guy who says to you, I can't budget because my money is little. I don't earn money. I don't earn enough. Budgets are for people who earn very little. In fact, the whole concept of budgeting is applicable for scarce resources. I always say to people, do you think a billionaire like Patrice Motsepe in South Africa prepares a budget for what they will eat? Meat budget, grocery budget? No, they don't, because money is not scarce to them. If money is scarce to you, then you need a budget. So don't have this thing like, I'll prepare a budget when I have lots of money. If money is scarce to you, then you need to prepare a budget. So that's the first thing that I want to say as far as budgeting is concerned, because that's very, very important for us to understand. The other thing that I also want to say, which I highlighted, if it's not budgeted for, it can't be spent, right? So sometimes we get into financial problems because of our expenses and the nature of our spending. So what I normally do at the end of each month, I take time to look at the receipts. Is there any way that I'm spending money in ways that are not ideal? Where can I save money based on my spending? And that's what budgets are there to do. So let's now do a risk analysis. When you do your risk analysis, people are different. People have different risk appetites. I would want us to have a risk plan. I would want us to align our risk management strategy to what we are exposed to, right? So in slide 8, I've given you examples of common risk events in the first column. So a risk event could be sickness. If you were to do a risk assessment, we can fall sick at any time. What it basically means is that you need medical aid. I've seen people who said, I don't need a medical aid. You need a medical aid. You can fall sick at any time, all right? The only thing here is that when you are younger, all right, probably you don't go to hospital that much, but when you get old and when you are aging, you need more comprehensive products of medical aid. People do the opposite. They get comprehensive medical aid when they are working, and then they run out of money as they age at a time when they should be getting more comprehensive forms of medical aid. And that's why you'll see that people rely on their parents, on their children. If you are a parent, to say my children is now working, they must take me to hospital, that kind of thing. After I've trained you and you're a black belt, you will never rely on your children for financial assistance. Instead, you will pass on generational wealth to your children and give them an advantage. So I know you might have grown in a setup where there was an expectation that you will take care of those that are elderly. That's fine. And it's actually a good thing. But you must be the person that says, in my generation, it stops here. By the time I die, I will pass to my children, right? Because even the Bible says a good man leaves an inheritance for their children. So that's what we are talking about. So for sickness, you must have medical aid. and you increase that medical aid as you age, right? If you are young, there are certain medical aid, products where they provide for shortfalls. I prefer, because I'm trying to save every cent so that I can retire by a particular date. I don't like those kind of products where they are shortfall. So I will use my own reserves to cover any shortfall in medical aid. Remember, my reserves are earning interest. My reserves, I can use them for self-funding. So my preference as far as insurance is concerned is that I have come to a decision that if I think that the insurance product is very costly, because some are costly, I will self-insure myself, right? So there's the concept of self-insurance, so that if that event happens, I can then draw down on my reserves and use it. But the way that I create a reserve is that instead of buying more insurance than I need, I'm very careful that my insurance is aligned to the risk assessment that I have done for myself. So let me just tell you how risk assessments work. I've got 3 boys, all of them play rugby. And when you're playing a sport like rugby, you can have injuries. One of my boys had a concussion the other day, and we had to take him to an expensive doctor. Because my risk is very high, I cannot afford not to have medical aid, right? I can't afford to get a medical aid which does not provide for hospitalization, because anything can happen. But also at the same time, I need to self-insure myself in case a much more serious thing actually happens. So medical aid, let's just be careful. What I have seen is that insurance, sometimes medical aid is very expensive. So you need to make sure that you've got adequate, but not, more than is necessary. Because I have seen people who've got more insurance than is necessary, and when they hit financial rock bottom, they start canceling their insurance. Death is also a risk event, which is a reality. The way that death can come is that it's an extreme event. Let's just define death as an extreme event. So I would want you to have life insurance as well. But the way that I would want you to structure life insurance is that you do an assessment every year in terms of how much life insurance you need. As you create residual streams of income, passive source of the income, you then reduce your life insurance over time, because you are building financial independence, for yourself. But when you are starting, you need life insurance. But as you make financial progress and as you are assessing your life insurance need on a yearly basis, so at the beginning of the year, you determine how much life insurance do I need? And then over time, you will reduce. I normally put it this way. Do you think that a billionaire like Patrice Motsepe buys insurance policies and life insurance? No, he doesn't. I don't know about his finances, but I'm actually speculating here. But I don't think that he would then go and say, I want an old mutual life insurance policy. No, he's got reserves, he's got companies, he has created streams of income, and he's able to absorb that life event when it happens. So that's what we're talking about here. We need to be very clever about how we use risk management tools to be able to manage, our risk. It's a function of our risk appetite. It's a function of the financial progress that we are making. Let's talk about cars. If you've got a car in South Africa or in any other country for that matter, you need, car insurance. The sad thing that I have seen is that, and this is a statistic that you will hear insurance companies telling you, only 30% of the cars on the road are insured. So you have a situation where somebody buys an expensive car, but then they don't have money to pay for the insurance, and therefore they don't insure the car. If they're involved in an accident, then they are in trouble. Right. So when you are budgeting for a car purchase, also budget for the insurance that is required. In fact, I remember when I was working at ABSA, I had a situation where a guy bought a BMW 7 Series, believe it or not, very expensive car, because he was suffering from goop. Remember the goop that I told you? Good opinion of other people. So he was influenced by goop. He bought a BMW 7 Series. But the way purchases work in South Africa is that the bank will not release the car unless you show them proof of the car having been insured. So the guy went to Outsurance, got a policy with the Outsurance, showed it to ABSA. ABSA released the car. He went back to Outsurance, canceled the policy because he couldn't afford it. And guess what? The unexpected happened. The car was a write-off. He was involved in a car accident, but by that time he had canceled the insurance. And I see this time and time again where people take an unnecessary risk. Have you ever been involved in an accident? And then when it comes to you exchanging the driver license details, the guy says to you, I have no insurance. I know of a panel beater somewhere who can panel beat your car. I've heard that on 2 occasions. And this guy was even saying, no, let's not make it a police case. I can even sort out your car right now. That's when I realized that there are so many people out there who do not have insurance. And my advice to you is that get comprehensive insurance with a reputable car. But in addition to all of those, you need to self-insure yourself. I travel quite a lot. I make it a point that before I go, I get travel insurance, because anything can happen when I'm outside the country. And that's part of managing my risks. I study the policy, I look at the travel insurance that will be applicable for what for my needs and for what risks may actually happen in my life. So that's what risk management is all about. We are making sure that we are covered, but not spending unnecessary money giving to insurance companies who are in the business of making money in this particular I can end up talking quite a lot. Yeah. So Tafadzwa, maybe let me just hand it over back to you, but I'll just look at the screen and see if there are any questions. I don't see any questions here. I don't see any questions. So I'll just end it there. Taffy's page, Taffy is all about making dreams a reality. We are very, very passionate about sharing the experiences that we have had over time. We've made mistakes, but you don't have to duplicate our mistakes. But not only that, we've had experiences coaching people on their personal finances. After we're done with this thing, I hope Taffy will allow me to even coach entrepreneurs and share with people the journey that we have traveled as entrepreneurs, the mistakes that we have made as entrepreneurs. That's what we are very, very passionate about. Don't hesitate to communicate to Taffy and get ideas. Some of you, I've heard people asking, Temba, hopefully when we get to brown, black belt, you won't charge us for your presentation. These group coaching exercises are free, and we are prepared to share as much content as possible. Even when the book finally comes, after it's been printed, we will let you know. After we've done our website and you can assess yourself in terms of your proficiency level with regard to managing finances, we will also let you know. And you can then use those free tools. The only thing that I charge is one-on-one coaching, but I don't recommend it if you are white belt, yellow belt, orange belt, and even green belt. It starts when you have learned certain things, you have developed, then I'll be able to invest my time and do one-on-one coaching with people. But let me just close by saying 3 things which are very important. And these are messages that I emphasize in the book. The first thing is that if you've got a stream of income, you can retire in 5 years. by applying the right principles, having the right mindset, having the right habits, you can retire in 5 years. That's my belief. And retirement, the way I define retirement, is creating a passive stream of income which is equal to your monthly expenses. That's what I believe. So that's what I will continue emphasizing. The second thing that I emphasize is that financial management skills are not for those that have done economics or accounting. I actually believe with all my heart that even in as part of our school system, we must teach kids, regardless of what discipline they would want to pursue later on, we must teach them financial management skills, because these are life skills that we are talking about. And my concern is when somebody gets to adulthood and they are dealing with money, but they haven't had the money management skills that would enable them to make progress. And so that's my concern. The other key message that I would want to leave with you is that in your financial management journey, as you improve yourself, educate yourself about finances. There are key numbers that you must know about. Inflation is one of them. Inflation is an enemy of money. And so in your management of money, you need to understand inflation and how it impacts on what you do. Interest rates are something that we need to be comfortable with, especially when it comes to the effective cost of credit. I'm sure you've heard this quotation where somebody said compound interest is the eighth wonder of the world. Compound interest is a good thing. People that borrow money, you have compound interest working against them. But people that learn to invest, you have compound interest in their favor. So what we are trying to do here is to get you to cooperate with the principles of compound interest so that they are working in your favor to accumulate wealth, which you can then pass on to your children, which you can then enjoy while you have time. It saddens me sometimes to see people that have made money in their old age, but they are so old that they can't enjoy the money that they have made. I would want you to create wealth while you still have the energy and also be able to enjoy the wealth that you have made. So let me stop here. Over to you, Taffy.
Thank you very much, Timba, for the valuable nuggets. To those who are going to watch the live later, if you have any questions, you can write to Tafadzwa at tafadzwamazibukospeaks.co.za, or you can just write in the comment section. We'll be checking out the comments and we'll address the questions at a later stage. Temba also has a YouTube account, Manage Your Finances Like a Black Belt. You can also follow and subscribe. We also have a YouTube account, The Dream That Is Worth Fighting For. You can also follow and subscribe. Thank you very much for following. We appreciate your support. Enjoy your week. Cheers.